to day 3 of our themed month of video content running throughout January, which is being produced and hosted in association with our friends and partners at Lendlord. And we are calling this themed month Digitisation of the Landlord Lifecycle. And we are encouraging landlords to look at how they can digitise many different aspects of their landlord life to help run their business more smoothly. Yesterday, we heard from Henry Davis about tenant acquisition and assessing demand. And today, we're still in the pre-acquisition phase of the landlord life cycle. And just to remind you, this is the phase when the prospective landlord is undertaking their research, starting to work on their business plan. And as we mentioned, it would include searching for tenant demand before you go around creating the supply. You'll be looking at the area that you wish to invest in, the type of property that you wish to invest in, the strategy that you're going to use to invest. And you'll also be thinking about your tax structure and talking to tax professionals about the best tax structure for you. You know, this is also where you need to be getting your finances in place, because without finance, you won't be able to buy anything. So we'll be talking about that later in the week. But also, and this is the digitisation that we're looking at today, this is also the phase where you need to start stacking deals, because you need to understand if deals make financial sense. And you can do that using the Lendlord Deal Analyzer. And Aviram, this is almost like the doormat into the whole Lendlord platform, isn't it? Because, you know, stacking deals by data, it's really, really going to mitigate your risk, and you're going to understand if a deal actually makes financial sense, because there's no point going out to view, I don't know, 20 properties and only 2 of them only stuck up financially.
Absolutely. Because of that, we developed the deal analyzer that we will demonstrate in a sec, because it allows the landlords to understand the return. The return, like the short-term return and the long-term return that is in property, is very important. When you analyze deal, you need to take into account many parameters, and you need to take a look on different scenarios, and you need to understand what is the worst case scenario, what is the best case scenario. And analyzing and using digital tools for doing that will mitigate the risk eventually, and help you make better decisions. So especially for newcomer landlords, newbies, using the deal analyzer is protecting them from making mistakes. So it's a crucial tool when you analyze new deals or when you're just starting in property.
No, I totally agree. And, you know, it's worth noting that the Landlord Deal Analyzer is free to use. And what's not to love about that, particularly the level of granular detail that it gives you about your prospective property deal. A lot of landlords, or certainly new landlords, tend to use the figure of gross yield. And that, Aviram, that's not a particularly good metric to use, really, is it?
Yes, I think that when you analyze it, you need to take a look, like a holistic look. You need to take a look on more than one metric. And the gross yield is perhaps, you know, it's a great way to compare different deals, but it doesn't say a lot, because basically, if you, like as a financial investor, you need to get return on your cash. So we measure also like the cash on cash. So how much net cash flow you're going to earn from this property in the first year, and how much you're going to earn for the long term, and how much this cash means in terms of return on your cash investment. Because usually when you do deal, most cases you will take finance to finance this deal, so you leverage it. So there is a lot of being for the cash on cash metric. We also measure the ROI, the total return for the short term, and the total return for the holding period, that can be 10 years or even 20 years. And there are some other metrics that we also present to the investors, like cap rate and equity multiple, and many complex things that not necessarily you need to to be expert, but if you take a look on 2 to 3 metrics and you analyze more than one property, and you also take a look on the worst case scenario and the best case scenario, then you have great comparables and you can understand, okay, if this deal looks stack or not, and how it compares to other deals that I can do right now, etc.
Yes, I think a key thing to understand is that numbers never lie, provided that you put the correct inputs in at the beginning of the calculation. And whether you're sourcing deals for yourself or you're using, say, a deal sourcer to find you a deal, you can use the Lendlord Deal Analyzer just to make sure that that deal does stack up financially. And you know, in my day, we used to, before digital tools came along, people used to say, oh, it's okay as long as the rent covers the mortgage. I think that's a very, very risky position to operate from, particularly in 2022, when we've got uncertainty ahead, maybe some turbulence in the property market. Everything that landlords do in 2022, I think that they should be looking to mitigate their risk. And certainly when you're stacking deals and you are assessing a potential acquisition, you should always use the Lendlord Deal Analyzer to check that deal out and make sure it does stack up financially. Because Aviram, as John Howard, our dear friend John Howard always says, some of the best deals are the ones that you don't do, because if you did do them, they would, perhaps take you down financially. So really, really important to use the analyzer. And I think the other good thing about it, Aviram, is it kind of also strips away all the emotion, because you're just looking at the data.
Absolutely. Yeah. The data never lies. So definitely analyze, use the data, make decisions based on data, less on your intuition, and yeah, give up on deals that doesn't stack. I think it's a great advice.
Well, we do have an in-depth demo of the deal analyzer. You can also go onto Lendlord chat box and ask any questions that you have there. You can also use the Lendlord Calendly function to book a personal demonstration with the Lendlord team. But right now, we're just going to give you a very quick overview of the deal analyzer and the sort of metrics that it can give you. This is a non-exhaustive look because it's a very deep piece of software. So, it's something that you do need to really dig down on and really understand how to get the most out of it, because it's extremely powerful. So, Aviram, let's just have a quick look at how to analyze a deal.
Okay, so after you create your free Landlord account, go to the deal analyzer from the menu. You should start with typing the address. After you enter the address, you immediately will see some information about the property that we extract, the EPC level of this property, the property type, what is the total floor area, and some information about the postcode. So what is the average yield in the last 5 years in this postcode, and what was the 5-year growth in the last 5 years in this postcode. Then go to the numbers. You just need to type in two data items. One is the purchase price, and the second one is the expected monthly rent. The platform will complete all the other fields with defaults that you can tweak after that. But after I put just the purchase price and the expected monthly rent, I start to receive the first year metrics. So I can see what is going to be my net annual cash flow in the first year, the cash on cash that we just discussed before, the gross yield that Vanessa that you mentioned. So the gross yield basically is the gross rent on the entire purchase cost. And what is your first year ROI? And the cap rate and other important metrics. I will touch the long term as well in a second. So after I just entered the initial fields, I'm now going section by section to tweak the data. So for instance, in this case, let's say that I might purchase the property in under value. So perhaps the actual value is 470. And I can see that it will impact my first year metrics, and also some impact the long-term metrics. I can use our API with property data to estimate the prices in this postcode based on some parameters that I need to enter. And I can use the estimation, or I can, use my own estimation, or like any indication I have from outside. But let's use this for instance. Stamp duty, of course, we calculate it, but make sure that if you think that you're going to pay a different number, to put the correct number. Refurbishment costs. So if you're going to invest and do some refurbishment of this property, or buy some furnishing, if you're going to upgrade the energy performance, you can use this link. It will take you to the government website. You can see some information about this property in terms of the EPC, and also to get some estimations about the cost to increase the level of the energy performance. And I always put some other costs just to be on the safe side. And this is my tip: be conservative and put, it's better to put more costs and be surprised rather than get, unexpected costs that you need to spend. The closing costs, you need to include the expected legal fees, if there are some inspection costs, and if you have any other costs that you want to include, you can also include them here. And then you can see again how it impacted your first year metric. You can see the first year ROI is very high because we have a difference between of the property value and the purchase price. Usually it's not the case, so I will change it just for this example. Let's take it to 170. So then the entire purchase costs are this amount. And I will go now to understand how much cash I need, or how much cash I want to put on this deal. So the cash investment and the loan details goes together. So in this case, the default is 72% loan to value, but I might be able to increase it to 75. The deposit will come 25%, and this is important. It's not the cash that you need to put on this deal. It's just the 25% from the minimum between the purchase price or the property value. So I need to put more cash to cover the stamp duty, the refurb cost, and the closing costs. So basically, total, I need to put around like 32% in cash, even though the deposit is only 25%. So this is the required loan that I need to take. I can check and use landlord mortgage simulation to understand which rates are now available. And if you put the portfolio on the landlord, we also, the engine takes it into account and analyze your portfolio. And based on that, you can see the rates that are now available out there. You can select the rate and use it on your analysis. And again, see how it impacts your metrics. You can also decide if you're going to take an interest only or capital and interest, and again, see how it impacts the metrics. Then I will go to the operating monthly expenses. If I'm going to use an agent, managing agent, what are going to be the fees, the landlord insurance, if there is a service charge that I need to include, any payments on utilities. So basically, like it's a way to understand you mentioned before that, that you need to take into account that rent, a good deal is not just the rent to cover the mortgage costs. There are many other costs that associated with property business, and you need to be aware of that, and you need to make sure you have the right margins, and also to plan if you have unexpected events in the future. So after you take care of the monthly operating costs, you go to the long-term assumptions. The first thing I would take a look is the occupancy rate. So landlord allows you to estimate any vacancy in the future. So let's say if you put 92%, it means that at least 1 month a year, you will have a vacancy on this property. If you want to be more optimistic, you put 95, if you have a long-term agreement, you know, you can put 98 and you see how it impact your metrics.
I'll just jump in there, Aviram, because I think it's just really interesting to say that as you use the Lendlord tool, you will build up your own data. And if you're buying properties of a similar type, all in the same area, you will start to build up your own history of occupancy. And then when you acquire a new property, you can use your own data from your own historical archive to actually plug in to the deal analyzer. The more accurate your inputs, the more accurate your outputs. So sorry to jump in there, but I just thought that was interesting to say.
Sounds like a great feature that we can add. So basically, like, to let the engine understand the vacancy of the existing properties in the area of like the user. And then if you want to use the same vacancy you have on your other properties. Yeah, I think it's a great indication. Then you need to put some assumptions for the long term. So what is your expectation for the property appreciation over the years? So we take automatically the default from the postcode 5-year growth. But of course, you can change this number and you can see how it impacts your long-term assumption, long-term metrics. The same for rent appreciation. If you're expecting, you know, any rent increases over the years, and also the inflation that will impact the expenses side of your property business over the years. You also can take a look on so if I hold this property for 10 years, what are going to be my metrics for the long term, and it will change if I hold it for more or less years. And another important metric that I will mention today is the IRRs. It's the internal rate of return. And this is like a formula that calculates, it takes into account the net cash flow, it takes into account the property appreciation. And basically you can see the average yield, or like the average return over on an annual basis over the years. So it's also something that you can compare from deal to deal. Then you can save the property as a prospect. And once you save it, you can review it on the My Portfolio page. And in the My Portfolio page, you can compare different prospect properties. So, so you can basically analyze this property and this property. I will switch to the performance view, and I will see the difference between both of them. So in this case, you know, you can also put two prospects with the same address. So one is if I do like a cash only investment, if I do like a leverage, and I can see the metrics if I do it like this or like this. And you can do it for many other scenarios, like the best case scenario, the worst case scenario, if I'm doing refurbishment, if I'm not doing so, and then you can compare a deal to deal, or you can compare different properties in different areas and understand what is the performance, what the performance is going to be.
Well, I am sure everybody watching this, you know, is that you can't but be impressed by the power of this deal analyzer. Every time I watch one of these demonstrations, I'm reminded again of how brilliant this software is. And essentially what Aviram has shown you is how you can actually start to build up a deal pipeline and have these deals all building up in the background, researching them, putting in offers. Maybe an offer won't be accepted at first. Maybe they'll come back at a later date and say, actually, you know, we haven't managed to sell the property. We could maybe do this, and they'll name a figure that they would accept. You can plug that into your deal analyzer straight away and understand if the deal is viable for you on that basis. So Aviram, I just think it's the most brilliant tool that every landlord should want to use. And as we mentioned, it's free. You just have to sign up for your Lendlord account. But I think the other thing is that this is a deal analyzer of two halves. And tomorrow we will be looking at the due diligence function of the deal analyzer. And because this is a digital platform, it can benefit from what are known as APIs, where it can actually draw in data from other platforms. So it's very, very exciting when you see all of this data and insights and intel start to appear before your very eyes, all just being brought into the same dashboard. And that's what we're going to be talking about all this month, is about living your landlord life on a digital dashboard. And Lendlord has got so many functions that all work together to help you run a very efficient property and landlord business. So Aviram, thanks for today. Any final thoughts?
No, I think we covered most of the things and most of the benefits of using digitals when you in this phase of the pre-acquisition. Take a look on the numbers, be conservative, compare different scenarios, and then make decision based on this data. And you can also use the prospect report. You can download the PDF, share it on property types forum, or like with friends, or people that in the market to understand and get feedback on the specific deal.
Fantastic.
Yeah.
Well, I'm very excited about the month ahead. We've got so much great content and insights to share with you, not just Lendlord as a digital tool. We are going to be talking to other providers of complementary digital platforms as well, and really encourage you to embrace digital in 2022. That should be your New Year's landlord resolution, in fact, and we're going to help you make that and stick to it. So we've got a whole month of content coming up. Tomorrow I'll be back with Aviram, and we'll be looking at the other side of the Lendlord Deal Analyzer, and that is the due diligence intel. This is really, really exciting. You'll be understanding how you can get sales comparables, rental comparables, socio-economic data, crime rates, all of this stuff that you need to know when you're assessing a property deal, and it's all at your fingertips with the Landlord Deal Analyzer. So please do join us tomorrow as our digitisation of the landlord lifecycle video themed month continues.